Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else.
Friends, welcome to another video on your channel Profit and Equities. If you like our content, please don't forget to hit the like button. Also subscribe to our channel, click on the bell button and choose all notifications to receive important financial updates from our channel at the earliest. In this video, we will be talking about 5 stock ideas from Karvy which can be considered after the recent decline. Also friends, if you are benefited by the content that you see on our channel, please don't forget to share these videos. This motivates us to keep making these videos for you. Please watch this video to know more about these 5 stocks. Now the first stock on the list is Bharat Electronics Limited, which is available at Rs 102.50 and the face value for it is 1. The symbol for it is BEL. Now Bharat Electronics Limited is engaged in the design, manufacture and supply of electronics products for the defense requirements as well as for non-defense markets. The company's principal products include weapon systems, radar and fire control systems. This is also involved with communication systems. Now the 1-year chart reveals that this company was on a slow uptrend for about the first few months of the year, but since then has largely been on a downtrend. The market cap of the company is 25,184.15 crores, which means that the company is a large cap one. The EPS of 5.70 translates into a price to earnings ratio of 17.98, which is largely in line with the industry price to earnings ratio of 18. The book value of 30.56 translates into a price to book ratio of 3.35. The company has a dividend yield of 2.20, whereas the promoter holding for this stock is a strong factor at 66.01. Now this stock has corrected substantially from its 52-week high of 193.40. The 52-week low is 96.70. Now annual order inflows for this company is expected at Rs 12,000 to 13,000 crore for the next 2 years. Execution of electronic voting machine and voter verifiable paper audit trail in H1 of FY19 will hold the key. The mix is in favor of non-defense related orders with inflows improving substantially. Moreover, execution of defense orders could also witness a pickup. BEL has 40% market share in the defense electronics market and is available at close to 14 times FY20 estimated earnings per share, which is lower than its 5-year average of 18 times. The price correction of almost 50% seen in the last 6 months due to fear of lower margins seems overdone in Karvy's view. Now the second stock on the list is Gujarat Mineral Development Corporation Limited, which is available at Rs 115.70 and the face value for it is 2. The symbol for it is GMDC Ltd. Now Gujarat Mineral Development Corporation Limited is a holding company. The company operates through 2 segments, which are mining and power. The company's projects include lignite, bauxite, fluorspar, multi-metal, manganese, power, wind and solar. Now if you were to look at the 1-year chart, you would see that the company was on a supposed uptrend for the first few months of the year, but since then has been largely declining in value. The market cap of the company is 3,679.26 crores, which means that the company is a mid-cap one. The EPS of 13.67 translates into a price to earnings ratio of 8.46, which is much cheaper when compared with the industry price to earnings ratio of 13.86. The book value is 138.68, which means that the company is trading below a price to book ratio of 1, which again indicates the cheap valuations for this company. The company does not have any debt and hence the debt to equity is 0, whereas the return on equity for this stock is also a very good number at 0.2620. Other positive factor for this stock is the dividend yield, which stands at a very healthy number of 2.59, and the promoter holding is also a very strong factor at 74%. Now the 52-week high for the stock is 180.90, whereas the 52-week low is 101.75. Now GMDC is a strong buy even at current levels on strong earning trajectory and robust operating performance. Strong demand for lignite capacity addition and traction in power business are among key factors which should go in its favor. The stock has fallen substantially and this would also add a relative margin of safety to any purchase decision for this particular stock. Third stock on the list is Talbros Automotive Components Limited, which is available at Rs 287.70 and the face value for it is 10. The symbol for it is TALBROAUTO. Now, Talbros Automotive Components Limited is an auto component manufacturer. The company is engaged in the manufacture of gaskets and forgings. The company's products include gaskets and heat shields, forgings, suspension systems, hoses, and anti-vibration systems. It caters to various vehicular segments such as two-wheelers, passenger cars, light and heavy commercial vehicles, agri equipment, and industrial and off-road vehicles. Now, the one-year chart revealed that this company was consolidating for the first few months of the year, then had a major spike, but since then has largely been flat. The market cap of the company is 355.18 crores, which means that the company is a small cap one. The EPS of 15.46 translates into a very cheap price to earnings ratio of 18.61, which is also much cheaper when compared with the industry PE of 36.04. The book value of 125.18 translates into a price to book ratio of 2.30, which also is not wildly expensive. The debt to equity for this stock is 0.7505, whereas the return on equity stands at a number of 0.1367. The company has a dividend yield of 0.52, and the promoter holding for this stock is also above average at 56.63. The 52-week high is 354, whereas the 52-week low for this stock is 175. Now, this company is the flagship manufacturing company of the Talbros Group and was established in 1956 to manufacture automotive and industrial gaskets in collaboration with UK's Cooper Payne. Talbros stands proud and tall as a mother brand of gaskets and heat shields, forgings, suspension systems, and anti-vibration component and hoses. The Talbros Group has formed strong partnership with global giants, and this is also a strong factor for this stock. Improving automotive demand, Bharat Sanchar 6, robust order book lineup, and increase in revenue visibility should act as opportunities for this company going forward. Now, the next stock on the list is Jain Irrigation Systems Limited, which is available at rupees 82.25, and the face value for this stock is rupees 2. Now, Jain Irrigation Systems Limited is an agri-business company. The company is engaged in the manufacture of plastic products and manufacture of fruit or vegetable juices, their concentrates, squashes, and powder. Its segments include high-tech agri input products, industrial products, and non-conventional energy. Now, the one-year chart reveals that this company had a huge spike towards the middle of the year, but since then has been largely declining in value. The market cap of the company is 4082.61 crores, which indicates that this stock is a mid-cap one. The EPS of 5.66 translates into a price to earnings ratio of 14.53, which is largely in line with the industry PE of 14.11. The company has a book value of 92.69, which means that this company is available at very cheap price to book ratio of less than 1. Now, the company has a debt to equity of 1.1003, whereas the return on equity for this stock is 0.0516. The company has a dividend yield of 0.91, whereas the promoter holding is a bit disappointing at 28.50%. The 52-week high for the stock stands at 150.40, whereas the 52-week low is 71.70. Now, the government's thrust on irrigation and infrastructure development and strong global order book are key factors that are likely to act as key tailwinds for this stock. Going forward, a thrust on irrigation, urbanization, and infrastructure building should support the valuations for this company. The stock has corrected substantially, and which again provides a good margin of safety. Now, the final stock on the list is Uppal Industries Limited, which is available at rupees 620.70, and the face value for it is 10. The symbol for it is APARINDS. Now, Uppal Industries Limited is engaged in the business of manufacture of conductors, transformers, specialty oils, and power and telecom cables. Now, the one-year chart would reveal that this company was consolidating for the first few months of the year, but since then has been on a slow decline. The market cap of the company is 2,375.33 crores, which means that the company is a mid-cap one. The EPS of 37.65 translates into a price to earnings ratio of 16.49, which is slightly more expensive when compared with the industry PE of 14.68. The book value of 266.42 translates into a price to book ratio of 2.33. The dividend yield is 1.53, whereas the promoter holding is above average at 57.96%. The 52-week high for the stock is 869.30, whereas the 52-week low is 597.15. Now this company is seeing healthy demand for conductors, transformer oil, auto lubes and power cables. New initiatives like molten metal agreement, copper conductor and harnessing business of railways would drive growth of individual segments. Passing on of increased raw material prices will place Uppal Industries at 7 to 8% of margin levels. Now friends, please don't consider this to be a recommendation on our part. Please go ahead and do your own research. This and all other content that you see on our channel is intended to be a piece of news. Also friends, if you are benefited by the content on our channel, please don't forget to share these videos. Your sharing such videos motivates us to keep making these videos for you. Thanks for watching, and if you have not yet subscribed to this channel, please consider doing so.